When you begin a new database in CenterPoint, you need to establish beginning balances that will describe the financial picture of your business before entering first transactions in CenterPoint. We're going to go through how to enter beginning balances for the different types of accounts. We'll begin with Setup, Accounts, and Accounts, and you're going to select the Balances tab. Many of the balances are going to be put in through this screen. If you have multiple companies, each company stores its own balances. So you're going to be working with one company at a time, and you'll select your first company in the upper left. In the upper right, click the beginning period button. That takes you to the beginning period of this database, which is the period prior to the first month that you're going to start transactions. Then in the list of your account types here, these are your balance sheet type of accounts that we're going to be putting in beginning balances for. We're going to right click and expand all groups so that you can see all of your individual accounts underneath the account type and account categories. Down at the bottom there's an options button. You can store values in CenterPoint for book values, which is what we're going to enter at this point, modified cash values if you need a modified cash balance sheet, and there's a video for doing modified cash, and market values. When you enter the book value and we save those values, it's automatically going to update your market value with the same value, and then you can make any updates where you might need a different market value than book value, such as your furniture, fixtures, and equipment, or building and improvements. But right now, we're going to enter our book values. So you start with your cash and enter what your balance was for cash as of, in this case, December 31st, 2018, which is our beginning period. So we're going to enter a value here. Oops. And hit our tab key. And then you just go on right down the line. So if we have petty cash, beginning balance, we can enter that. Any securities, any of the accounts that you have in here. For accounts receivable, you won't be entering beginning balances through here. For those, we're going to need to enter a customer invoice because we need to maintain how much balance is there for each customer that is has an outstanding balance as of our beginning period. So we'll do that in a little bit. If you are using inventory in CenterPoint, then those beginning balances are going to be entered through a special transaction for your inventory items that are on hand as of your beginning period, and we'll do that at the end of this video. Your furniture, fixture, and equipment, if you are using fixed assets in CenterPoint, meaning you have fixed asset items underneath the accounts that are in these depreciable account categories, then those balances are going to be entered through Setup Fixed Assets. And we'll do that in a little bit too. If you're not using fixed assets, then they can be entered right here under the account. But if you do have fixed assets, you don't want to enter it here, even though it looks like you can. You'll want to do that through Setup Fixed Assets so it gets the individual balances to your individual fixed asset items. And we'll show you that in just a second. We're going to go on down now to liabilities, and under liabilities, again, accounts payable and credit cards payable won't be entered through this screen. We'll be doing those through a vendor invoice. But if you have any other balances in these other liability accounts, such as under long-term, we have a long-term debt here. If we have a balance for that, we can enter that balance in our long-term debt that is as of December 18 in this case. And then under equity, you won't be entering any beginning balance for retained earnings. That's automatically going to get updated for you as you enter these other balances. So that's what's going to make a balanced transaction, is all of the values you put in your other balances are going to update retained earnings to make it a balanced journal entry. But if you have other equity balances, if you had, like in this case, if you had a common stock, you could enter a balance there. So we're going to go ahead now and click Save. that will update our balances. It tells you how many accounts that it updated, and you can see that it also copied our market value over here. So at this point, we could change a market value on anything by going to our options and selecting market values. That would let us click in the market value field and then enter that value and save it again. Now we're going to go to set up fixed assets. If you have some fixed assets that you're going to maintain in CenterPoint, you would go to Setup, Fixed Assets, and it gets done the same way. You're going to go to the Balances tab, select your company, select beginning period, expand all groups. Now you'll see your individual fixed asset items. You can click in the book value and begin entering the values that you want in there for your different fixed assets. And when you're done, you're going to click Save. That will update those, and it will also update the accounts that they belong to in your setup accounts. Next, we're going to put in beginning balances for customer invoices. Before you put in beginning balances for customer invoices, you're going to want a sales item for beginning balances. So we're going to go to Setup, Sales, and Items, and I already have a sales item here for beginning balances. Give it the abbreviation of beginning balance and a name. It will be a non-tracked item, regardless of what kind of sales item that the beginning balance for that customer represents. If you're putting in beginning balances, it can go to this non-tracked item so it doesn't affect any other accounts, and fill out your general type description for your different categories here on the sales item. In accounts, you're going to want to select retained earnings in each one of these fields for sales, return and allowances, and expense, because you're going to use this beginning balance sales item for your customer invoices and your vendor invoices. So let's go ahead and you would save that. And now we're going to go to customer invoices, either under your quick list, or you can go up to processes, sales, and customer invoices. You're going to pick your first customer. So we have a customer Herb here that has an outstanding balance. In your date, you're going to put in your beginning balance date, and then go to the invoice tab. And we're going to pick beginning balance sales item, and you can go right over to the amount. You can put in a quantity of 1, it won't matter, but you're going to go over to the amount and put in what that customer owes you at this point. So we'll just put in a figure here, and when you're done with that balance, then you're just going to save it. That updates that customer, and you can go on to the next customer, and again use beginning balance and put in his outstanding balance. That will update your customer balances so that those balances will be there ready to receive once you receive them after you begin transactions. Now we're going to go under purchases and go to vendor invoices and pick a vendor that we have an outstanding balance for. So we have a Red Wing Broadband here, and that's our internet service. So you could pick the account that you want there, but if you're beginning in the middle of the year and you don't want to disrupt how much went into your different income statement accounts, I still would recommend using the beginning balance sales item that we had here. I need to do that in the item, and that picked up our account of retained earnings, and then you can put in the amount that you actually owe to that vendor as of December 31st that hasn't been paid yet. So we'll just put in a figure here, and then you would be wanting to update the date to our beginning period, and you're ready to save that. And now when we go to pay invoices due, that vendor will be there ready to pay it when you're ready to pay that invoice. So those are the ways of putting in the beginning balances for the invoices. If you were doing a credit card, you would do it the same way, but select your credit card in the account payable. and then select whatever vendor you want to represent for that credit card balance. Still use the item of beginning balance. That's still going to keep updating retained earnings for your beginning period. Now, if you are beginning CenterPoint in the middle of your fiscal year, then you can also put in beginning balances, year-to-date balances for your income statement accounts. Those will be done under a general journal. So under Processes, General Journal Entry, you'll leave the name empty. Again, select your date of 12/31/18 and General Journal Accrual, and you're going to use your year-to-date income statement that you have existing already for the activity just for year-to-date, and then select that first revenue account that's on your income statement. So we're just going to select one of our revenues, product sales, and an increase to product sales is going to be a credit. So you'll enter all your revenue as a credit if it's a positive value. So let's put in a figure here for our year-to-date, and you would go down and do each one of your revenue accounts and put in what you had from that income statement. When you're done with the revenues, then you're going to go to your cost of goods and your expenses. So if we do our cost of goods and our expenses are going to be a debit if it's a positive value. So we would put in a figure for our cost of goods and then our different expenses, electricity, whatever the amount is for those different values that are on your income statement. When you're done, you can put in a notation of beginning balances, and you're ready to finish this. We need to balance it. So our last account is going to be retained earnings. And when you pick retained earnings, you're going to click the difference button. That's going to make this a balanced entry, and that'll update retained earnings again. And you are now ready to save it because our difference is 0. So we could save that. And the very last thing that we would be doing is updating our inventory items if you have an inventory module. So we'll go to that next. We're going to close this and go to our processes and go to special transactions. And under special transactions, we have a template called inventory balance adjustment. You want to use that. Again, pick your company and our date for 12/31/18, our beginning period. And now you're going to want to use your individual inventory items. So you will have had to first create your inventory items before doing this entry. You won't want to use the beginning balance one at this point because we're actually establishing a beginning balance for those different inventory items that you're going to be selling later. So at this point, we're going to do our lookup and pick one of our inventory items, put in the quantity that we have on hand, and our total dollar amount that is for that. So it'll be our quantity times our price per unit. So it'll tell us then what that unit cost is. And now over on the offset account, we're going to again use the retained earnings. If you are storing your inventory by locations and inventory locations, then you're going to want to make sure and pick that information and make a separate entry for each of your different locations so we have that straight also. So we're going to pick our inventory location, and you can put a notation here again, beginning balance if you want, and then you're ready to save that. So I'm going to do one more for if you have any lotted serialized items, which we have a youth bike that will automatically pop up your lotted serialized item screen. And that's where, again, you can pick which location that it's going to and then add your serial lot number for each one of those items that you have on hand. And we're going to put in an amount here. And then you might have some other descriptions that you're storing on your lotted serialized items. And then you just keep going. If you had another one, you can add another row. And when you're done, then you would click OK. And that would add that value. And again, you're going to offset with retained earnings. Oops. And now we're ready to, you can put in your inventory location again if you're doing that, and beginning balance and a notation, and you're ready to save. And that will update those inventory balances. So after all those entries, if we go back now to set up accounts and go back to the balances tab and expand all groups, we can see that we've updated our accounts receivable, we've updated some inventory, we've updated accounts payable, and we are ready to start entering our transactions in CenterPoint if we have all of our beginning balances completed. And that completes our entering beginning balances. And you can also run a balance sheet if you want to see this on a balance sheet of the beginning balances that you've entered by going to Reports and under Financial Statements. Select one of the balance sheets, and you can select the beginning period here. Click OK and select the company and preview. And now we see all of the balances that we've entered and verify if those are agreeing with your balance sheet that you have prior to starting transactions in CenterPoint.